Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Thursday, the 14th of October. That's October 2021, and we're about 6:25 p.m. Central Time. I'll tell you something. Here's the difference. I'm smiling. The first half of September was so depressing because everything, at least for me, if I bought, market went down. If I sold, the market went up. It was one of those couple-week periods, more than a couple, I think it was about 2.5 weeks, where I just wanted to walk away. I realized what was going on and got away from it. And you get depressed because you're going, gee, it became a market where the guy that won was the bottom picker and the guy that got out that made the other money was the top picker because you were doing the wrong things in the market, but that was the reward. It was the guy buying the lower Bollinger Band, selling the upper one, making the money for a brief period of time. As I told you, 95% of the time, the market will trade within the Bollinger Bands, but that doesn't mean you go short at the top or long at the bottom. And there are periods where the market rewards doing just that. It isn't worth trying to figure out how long that period will last. It's the wrong thing to do, and it'll ingrain the wrong things in you. It's like being a contra-trend trader. They don't win typically. Those are the guys picking tops and bottoms. They churn their account. So what am I seeing right here? I'm seeing excitement. I'm seeing that the market's rewarding the trend trader again. The game has changed again. The market's back into what I'll call rewarding the trend people. Okay. So here you got a big stock market rally with further going on it right now. The market woke up for whatever reason in the past 72 hours and just said enough of this on the downside. Now we have a weekend coming up. Understand that with that weekend, there's going to be some profit taking likely hitting the market because so much money's been made just now. People learn to do that. Energy's not backing off. I was just talking on my other update, the metal. I was just looking at the heating oil market that I was telling my clients to do certain things in. Thank God they did them. End of discussion. So I said I was wrong in September. And they're up 10 cents at $420 a cent. It's a lot of money. Do I get wrong too? I'm going to balance that. Mr. Swiss cheese. You got to control the losses and try to let those other ones run. This is just that type of game. It waits for you to recognize things. Well, what I recognized is you have a real power crunch. It's not going away. OPEC's not going to get you out of this. I mentioned that to you before. The amazing thing to me has been that interest rates suddenly aren't going up. They backed away from the 1.62 area in the 10-year, and they're suddenly in the 1.5 area. Whoa. With that, they gave reason for the dollar to pull back, and gold came alive. Copper's under, I think, a squeeze play. It's gone, as you know, since Golden Week ended in China in the 420s. This is where this market is right now. It's rallied almost 10%. As the Chinese traders came back, I think they just recognized the fact that anything that needs energy is going to be hard to get if there's a true energy crunch, and there is one right now. So let's get away from that and talk the S&P. So far, I feel so good. Do you remember when I was pointing this out to you and I said, the breaks down don't last long? And they seem to come up for new highs. Now, what would change the picture here? Let's assume this market fails in this zone and gets under that low again. I don't see that under an 18-week average of closes. Do you? That would be a potential change. So as a chartist, and that's what I am, I recognize that. When I come to the market here, we're nowhere near these all-time highs. There's room to run in this market. And what is the trend? It's clearly to the upside, higher lows, higher highs. It's been that way since right here. It made the higher low and higher high. This was all the additional part. Then you got the pullback in the market, and now you've made your new high on the move. You were up today big. You were up 74 points in an S&P. That's a lot. You don't get those type of moves that often. That's almost a 1.7% move, getting a bit of follow through. Where did the market fight its battle eventually? Remember, we got down here and we were talking. And I said, is the market going to be able to respect this? And then I started criticizing so many traders that were saying on TV, you hit that 100-day average, and, if you hit it again, all the market collapses on you. And I kept thinking, I don't think that. I think a support point's a support point, a resistance is a resistance. There's other ways, like hitting a pinball machine, the reset button. You know how you had that, where things come into play. And when a market hits that number like it did, and that's what I'm looking at, I'm going, okay, it's reset time. If it falls back, here's the support again. And that's how I view it. Reset. If it's any good and it starts up from there again, watch out. It's exactly what occurred. Where do you think the pros want to come into the market? I'm thinking right here. Excuse me. I think that they'll be very concerned if you get back under 43.17 and a quarter. Barring that, where could the market be headed? Well, all your main moving averages are below you. So what's the number? It's going to be the upper Bollinger Band. And that's going to be up here in the 44.65 or whatever level. So I'd be looking at that. But there is something, there's always that animal that may not be perfect. This is embedded. When you get these, I can understand the pros buying to drive the market higher. When you're just overbought, and that's where you're at right now, no. I don't think you're going to attract tomorrow a lot of new money to drive prices another 74 points higher. It doesn't mean I'm right. It's my thought. I think resistance is above the market and support is here, and a lot of the money's been made for the short term. In the NASDAQ, it joined the party. So I can see the argument now for the support back at the 18 and the 100-day average, trend up. Now, what else happened? When was the last time we closed over the 18-day average, and what defines bias? Two questions. Well, you haven't closed over this 18-day average since September, when the market went into that funk to the downside. What else on the chart? Now that you closed over it, you've got the bias up. So you have the trend up, the bias up, which sets up support right here, and you're not overbought. That's how I'm defining the market. Should it want to run any further? One potential target could be 1534.50. But to ruin the party, and there's always a way to ruin it, if you take out 14,585.50, that breaks the party. Other than that, watch out for the overbought condition. Understand that many systems look at the market. If it's overbought, they won't step in. They want to take money off the table to get it away from the overbought, or as slow stochastics can teach you. That's why I did that enhanced Bollinger Band course with that. It's on the website. That's what you want to be looking at. Then we get to the December, this Dow. This is not the same chart pattern. Nothing like it. You have a lower low, higher high. It's a trading affair. It is not doing what the other two are doing. The Russell is. And remember, we spoke here just this week. When I say we spoke, I'm talking days ago. We were neutral. We fell back, and I said, gee, you have the 200, the 18, and the 100-day average. Got to work through these one way or the other if you get anything going. This was Tuesday. So today is Thursday. We'll see Friday's action tonight. Markets trying to figure out what to do. Can't quite get through it. This is yesterday. Today it says, I'm back. I'm here. I want to be part of this. And boom. So where does the market stop? Right at the Bollinger Band. What do you think the pros are doing? They took my enhanced Bollinger Band course. And they're saying, okay, that's where some of that resistance is. I'm obviously being facetious, but I'm really not. Overbought there. I think the pros are taking money off the table. Taking money off the table is not getting bearish. VIX cash. If you drop any further and hit the Bollinger Band, I expect the pros to write puts, which will give me an idea that a correction is going to hit in the stock market. Just go up from here. I can live with that much easier. In the 30-year bond, well, you're in the middle of no man's land. You're got the 100-day average up here, and you're sitting right now with the 18 over here. It's a rough thing, and it's not trending. You have a lower low, higher high. Not the case in the 10-year note. The 10-year note lost an embedded reading. So when you lose that reading, you don't want to be short anymore. The odds favor that price is going to make a run at the 18-day moving average of closes, which is right here. That is not necessarily a buy signal. It's where the market, I think, goes to go, okay, that part of ended. What I will say is that down leg is over. Is there anything on this chart bullish, though? No. Is the trend down? Yes, but it's oversold, and it has to work out of that. All you have to do to get it worked out is get the D reading, which is the blue. There's two numbers that make up the slow stochastic. Why they're K and D is totally beyond me. But if that blue line, it's easier to say that, gets and closes over 30, it's no longer oversold. In the dollar index, the market's been. I want to give you my professional word. Write it down. Mishmash. The momentum's been doing this, and that's what you've been doing here. Nothing. The dollar's fallen back. Okay? And that's given impetus to the rise here. Where did we talk about if you lose the embedded reading, if you get the red line to close over 20, you go. 18-day average of closes. Pretty good run. So I don't see a trend here. I see a pause in the dollar. I see a pause in the euro, but they have not said, hey, I've changed my whole pattern of trade. I haven't seen that yet. British pound. Now we're starting to get some of the MPCs coming out, and those are the Monetary Policy Committee members coming out and saying, no, I don't think we should be making any move. As much as we're hearing that we're going to raise interest rates, maybe this is not the time to do it. So there's cracks in the armor happening there. Pay attention to that. By the way, there's a big crack in the armor happening here in the United States. Senator Sinema has come out from Arizona and said no. She doesn't even want to vote now on the reconstruction plan unless the plan that the Senate passed, the $1 trillion infrastructure plan, is first signed. I hope she holds her ground. That does into progressives. That doesn't mean I don't want to see parts of the other plan, or you don't want to see part of the reconstruction plan come out. Not $3.5 trillion and not all the pork, is that a good word, that everybody threw in. They were going to tax mining. Did you read what Joe Manchin said about that today? They wanted to put royalties on mining, first time since 1870s, on federal land. This is getting crazy. That's not how you make America grow. And we're starting to see the cracks and all that. I'm sure Bernie Sanders is rolling over. As you take a look at all this, look at how the market's still embedded. There's nothing here in Bitcoin other than it's pausing. And still, until that red line closes under 80, I think pausing on its way higher. When I look at the Brent versus WTI crude, did we not start saying it? I pointed it out to you back here. I said, folks, something changed. We finally, not here, and this was October 11th. So I don't want to give you the impression this is long ago. Today's the 14th. I said, something changed. Go look at your YouTube video. I said, if you can't get back up, they're taking the difference, and they're saying right now, WTI oil is going to narrow in on this Brent. That's exactly what is going on, right? Then we look at the Brent. Okay, everything's still bullish. Long embedded reading until the red line closes under 20. Actually, when you're embedded under 79, I got them backwards there. Under 79, I knew I said something wrong. Under 79, I think the pros are buying each one of these breaks, looking for the market to go up to those highs. It ain't over till it's over. Same thing here in the WTI crude as you look at it. Heating oil, I just told you. This market fell back. This was the buy area for traders. This was the buy area, and looking back, this, all with embedded readings. And each one is so far carried back up. Now, they don't have to go to the Bollinger Band. There's a window envelope number you have to look at. A window envelope is a standard deviation in some manner from the 18-day average of closes. I have a unique way of setting it up instead of percentage points. I certainly know the percentage points, and you can get them from volatility and so on. I think there's a better way to do it. And I give those daily. Throughout the day, I change the daily numbers for my traders to put it on the chart for them to see, but it's part of their paid subscription. And I know you don't want to pay me any money. So when you're looking at all this, you might want to go look at what we do at the Linn Group. For the free information, to entice you to take a look at us, what do you have to lose? I just used the word free. We cover all the markets all day long. If you get our free phone app, or if you get our apps that work on your computer, download, you can do it, or web version. You'll hear the commentaries throughout the day. You heard me what I said. Hear them. Just leave it on audio. It'll play them. You're getting reports on all this. If you're an options trader, options galore. If you're a spread trader, you're going to hear what the spread traders are doing in those markets. What do you have to lose? And then, of course, the out-and-out ideas on the market, and, of course, what the futures are doing. How do you get it? Go to iraepstein.com. Look at my new site. If you like it, by the way, you can always give us thumbs up on anything. And at the same time, what else do I want you to do? Go to free offers. Take advantage of it up there. It's on the top left. Have a great day.